Welcome to the Inside Esfera Wealth podcast, where Swiss precision meets global perspective. Esfera Wealth is a Swiss-regulated wealth management boutique, established in 2010 with a focus on serving high-net-worth individuals and families from Latin America. At Esfera Wealth, we are passionate about constantly learning from leading experts in the wealth management industry, as well as from entrepreneurs, CEOs, and business owners. Join us as we share insights, stories, and strategies from around the world. And now, here is your host, Andres Lacados.
All right, so welcome to our new podcast with Tim Stingelin. Tim is a dear friend of mine that I met 1 year ago in an event that we had about wealth experts next gen. And we had the pleasure to hear about your insights regarding crypto. And that's why we're having this podcast today with Tim to learn more about crypto investments. This is going to be an educational session. And for me, it's a great honor to have you here, Tim. Tim is the CEO and co-founder of T4 Capital. That's a digital asset management boutique based in Zurich, in Switzerland. And basically, you are specialized in investing in digital assets, in cryptos.
Yes.
Basically, right? So welcome. It's an honor to have you here.
Pleasure is mine to be here. Thank you.
Thank you, Tim. So I would like you to introduce yourself, to tell us a little bit more about your background. How did you get to be where you are today? Why crypto? What pushed you to go into this direction? And what is actually your day? How does your daily job look like as the CEO of T4 Capital?
So let me start with the first question. How did I get into crypto? The cryptoverse, how I'd like to call it, the crypto universe. There was 2017, my first year at university. A dear friend of mine who I later co-founded the company with, he was already very much into Bitcoin, and I have never heard of it to this day.
Mm-hmm.
And then I asked him, what is this Bitcoin all about, and why are you trading Bitcoin in a math class? And then he said, it's so exciting, there's so much to learn. And I said, yeah, let's grab dinner together. I'll cook dinner for you. So the following day he came over for dinner and he gave me the so-called orange pill. That's like the expression when you get the first introduction to Bitcoin, then you swallow the orange pill and then you either believe in it or not. It feels like there's no in between. I feel like if I explain Bitcoin to someone, they either remain skeptical or they fully grasp its idea and they want to learn more about it. And for me, it was, I jumped into it very quickly. For me, it was a moment, a very aha moment, you would say, a realization that I want to commit my time to this topic. So I started investing for myself. I started trading a bit, which I would not recommend because nobody knows where the price really goes. And that's how I started. And now to put this almost 10 years, to turn the wheel 10 years further or 9 years further, today my role as CEO of T4 Capital is still education. So what Florian taught me back in the days, I'm doing this on a day-to-day basis, on panels, on conferences. I get invited from investment managers, from private banks. We co-hosted some events with private banks where the topic of education of crypto was in the forefront. So I'm an educator and also I'm the direct line or communication line to our clients.
Okay.
So we are two active co-founders that share the daily operations. It's Fabio Cavelti and me. And Fabio is the portfolio manager. So he decides what gets into our strategy with the help of our investment committee. And I'm responsible for the relationships with our clients and to be the face of T4 Capital on the Zurich or Swiss finance marketplace.
Okay, great. So very interesting story, how everything began and where you are now. Congratulations.
Thank
it
you
has
very
been
much.
a long way, but you are here and I think you're...
Actually, I have one more thing to say,
Yeah?
which this was before COVID, 2019. I was studying at the Universidad Pontificia Bolivariana in Medellin. And there I had a friend. And a year after that, I wanted to gift him something for his birthday. And I wanted to send him some money because I didn't know he should buy whatever he likes. And then it was so complicated to transfer money from Switzerland to Colombia with reasonable fees. And then I told him, just download the Bitcoin wallet. It's the easiest thing to do. And he had never heard of it. And to cut the long story short, I sent him some fractional amount of Bitcoin to his wallet. He went to a Bitcoin ATM. He got Colombian pesos.
In Colombia?
Yeah.
Okay.
He got it immediately. And he was so fascinated that whenever he got a gift or something from his aunts that live in the US or his uncle, they send him now to his Bitcoin wallet, and he just gets to he retrieves from the Bitcoin ATM what he needs, and the rest is como ahorrar. He saves it on this account, and he's like he made quite some money over the years because whenever he feels like he doesn't need the money, he just keeps it there.
Okay.
So that was also a realization for me that Bitcoin is a global tool.
Absolutely.
Available to every one of us.
And today he's a Bitcoin millionaire.
I don't think his aunts and uncles were that generous with him. So he did not, but he, in absolute terms, is not a millionaire. But in, I would say in relative terms, he made quite some...
No, I mean, absolutely. How many people don't need to send small amount of money to somebody else? And that has always been a big issue, right? And I think,
exactly. And now we have stable coins.
Exactly.
I mean, back in the days, stable coins were not a thing yet, or they were there. USDT was the biggest one, still the biggest one today. But I think we will talk about stable coins later.
Exactly.
Its importance.
Yes. No, that's great. So, Tim, in your opinion, which role should Bitcoin have nowadays in a diversified portfolio?
So this is a question that I discuss with many of my clients from external asset managers, because they're more flexible and I would say more innovative than private banks. So I'm a big fan of external asset managers.
Thank you very much.
And because they act in their client's interest above all else. So they're not, because if you work for a bank, you have to push your own products, and an independent asset manager can choose from new asset classes like Bitcoin. And the pitch I give to those, to my clients is, Bitcoin has 3 very important characteristics why I think it's a powerful diversifier for portfolio. So it's not you have to kick something out and replace it with Bitcoin. I just think it should be an additional asset class with a minor allocation of, depending on the client's needs and the risk reward he wants from that trade. But between 1 to 5% would make a lot of sense in every portfolio, because you can get risk-adjusted returns to your portfolio that are superior than when you leave it out. The only thing that we have to mention here is we're talking about a very long-term plan if you invest into Bitcoin, because it's very volatile. So if you invest with a lifespan of 2 years, you can be very unlucky because you buy a local top. So we definitely don't recommend this. If you want to buy into this asset class, you should give it at least 5 years.
Okay.
But
now, sorry.
No, sorry. And to talk about the other 2 characteristics, what Bitcoin is. It's a first of all, it's a political hedge, because it's sovereign, it's independent. So I believe in a future where money will one day be fully digital. So there will be no cash, and you can either spend the digital money from the government, or you can spend digital money which is private, decentralized, and sovereign. And that's why I think Bitcoin and privately issued stablecoins are very important contrast to the so-called CDBCs, so the digital money from central banks. So it's a hedge against political powers. So because let's make an example, we get another corona pandemic or something similar, and if the world would only run on centrally issued money from a central bank, then they could just turn the money off, and they could restrict your money. For example, if you leave the house, because you should be at home because we're in a quarantine, and if you don't comply with the rules, they can just basically close your funds. And I think this is one very important hedge for the future, that we can keep the sovereignty of our money. And that's why I think privately issued stablecoins in a digital world and Bitcoin are very important. So you have this political sovereignty, and what I probably the strongest argument for Bitcoin in a portfolio is the generational trade. I think nowadays few people understand that there are trillions or hundreds of billions of US dollars or whatever currency will be transferred from the older to the younger generation in the next 20 years. And I believe that the people who will inherit this money, they will allocate capital into a form of digital gold. I think the generation of your parents, but also your generation, they're more used to gold as an inflation hedge. But my generation wants to have something digital. They don't care about or not that much. They don't care that much about the physical gold bar. So I think this generational shift will bring a lot of capital into Bitcoin. And to be part of this trade, you have to have some certain allocation in your portfolio. So to summarize this question, I think it's a very powerful portfolio enhancer. Small allocation, that's very important. And the best way is to do it with a dollar cost average. So if you, for example, if you have a client mandate and he wants to be 2% in crypto, then what would make sense is maybe to invest 1% today and another 25 bips over the next 4 quarters.
Okay.
Something like that.
Well, exactly to this point, I wanted to dig in a little bit more into, when investors try to avoid buying at the top, right? Now, how should they know if this is the top, right? I mean, we have seen the Bitcoin price has went up for so much for so many years. So, and I remember that I went to a presentation of yours a few weeks ago, where basically you and Fabio were explaining some of the indicators that you guys follow for you know if the Bitcoin price is expensive or cheap, right? And I think this is a very important topic that people are very interested to know, because usually, with stocks, we have a lot of indicators that help us to know if a stock is expensive or cheap, but we don't have that with Bitcoin or with gold, So when I saw those indicators in your presentation, I thought that it would be very good to, have it here in this podcast, just that people know which indicators you look at to know if the price is attractive or not.
So there's, I can talk about some of those indicators. One is the 4-year cycle indicator, which a lot of people doubted over the last year, but if you look at it, it's still intact. So the 4-year cycle means Bitcoin goes 3 years up and then 1 year into a correction. And since the inception of Bitcoin, this 4-year cycle has manifested to this day.
Really? So in which year are we now?
So we are
in this 4-year cycle?
We are in the year where we go down.
So we are in the year 4?
Yeah, exactly. So 26 started bad, and we think it's going to continue to go a bit further down. We believe that the biggest part of the correction has already happened. So we are very close to a bottom.
So 60-ish?
I think a bit lower.
Okay.
But to be honest, the bottom is probably between 40 and 50, somewhere in there. The price right now is, relatively speaking, it's very good. Because if you want to bet on the price going very low and then you don't get it, you're not in the market, and
you might miss the trend.
You might miss out. So for everyone that has not invested until now, it makes sense to start now little by little over the next couple of quarters or months.
Okay.
Because according to this, if you believe in this 4-year cycle, my opinion and also Fabio's opinion is, until proven incorrect, we do believe in the cycle, and it's still working to this date. So according to this cycle, 27, 28, and 29 will be good years again.
Okay, great. Any other indicators that you look at? I mean, we know we shouldn't we should never look at only one indicator, right? Because
100%.
it's never, there's not one indicator that is always right. Almost non-indicator is always right.
Exactly. You have to search for confluence. So where several indicators have the same area.
Yeah.
So we use about 12 indicators.
Okay.
Another one we use is supply and profit. So we look at that you can watch on the level of the blockchain, you can see how many of the Bitcoin holders are in profit and how many are in the losses. And usually at the bottom of a bear market, only about 40% are in profit and about 60% are in the minus. And now about 60% are in the profit and 40% are in the minus. So there's still quite a big gap, and that would indicate to lower prices.
Okay, I mean, I get that. If the investors buy directly, right, Bitcoin, but how do you measure that when there are ETFs in the middle?
The ETF is also something we look at, the ETF in and outflows, but that is the institutional part. So the analyzing Bitcoin has become more difficult because in the past it was just retail. And now you can see two different streams. You have the institutional capital, which is quite stable. So we had outflows obviously over the last couple of months, but the real sellers were the retailers. So that's also something we look at, retail seller exhaustion. Because if you look at the institutional capital, they do it quite well. Of course, some of them sold in the last couple of months, but now it's quite stable. So the most sellers are coming from the retailers. And I think this is because those retailers believe in those metrics I just mentioned. Another one is top to bottom from the last cycles. We started with 85 drawdown, then we had 80, then we had 75. The last one, or this one, I think will be even lower.
Now we are at how much drawdown?
So the top was at between 125,000 and 130,000 US dollars, depending on which exchange you looked at the top, and we went down to 58. So more or less, we went even more than 50% down, and I think we will land in between 60 or 65% drawdown. So this will again bring us more or less in the level of 40 to 50. That's why I believe in this confluence area.
Okay. Any other indicator that you would like to mention?
Yes, there are classic chart patterns that apply to every asset class. It's also
with the moving averages.
Exactly, moving averages. There's also we look at the 200 weekly moving average, and this one, the 200 daily. Sorry, and this one also shows it's coming up, of course. And if you assume the bear market end is in October, November, it's also again in this confluence area. So a lot of the indicators point towards 40 and 50, but what I want to note in this podcast is very important. If everybody believes in something, it's usually not going to happen. So what I could imagine is, or on Twitter, or if I talk to other people from the space, many say it will go down to 30. But I think this is exaggerated. Like many were calling last year, Bitcoin will go to 200.
That was also exaggerated.
It was exaggerated. So if my recommendation, no financial advice, but what I would personally do is, whenever I get the chance to buy Bitcoin even lower than today, I would use it with small amounts. And if it goes even further, be happy about it. You get it at an even cheaper price. But if you look at in the long-term horizon of 5 to 10 years, those prices today are amazing. That's my opinion.
Absolutely. Okay. So at T4 Capital, you guys don't invest only in Bitcoin, right? You invest also in other coins, which are called altcoins.
Yes.
And also in crypto stocks.
Exactly.
Yeah. Could you mention a little bit more about so first of all, why do you invest in something else that is not only Bitcoin? In which other coins do you invest and why? And at the end, we get to the crypto stocks.
Yeah. So we've been trying a lot of strategies. some of them unsuccessful that we did not commercialize. So we tested them with our own money or with some of our shareholders, and we came to the conclusion that it's not suitable for the broader client base. And there's one strategy that we liked a lot that we developed over 2.5 years, and this is this 3-pillar strategy. And it consists of 3 pillars, because that's why the name 3-pillar strategy. It starts with a base pillar, which is Bitcoin, and then 2 satellites. One is the altcoins and one is the crypto equities. And the reason why we decided for this strategy to be our biggest one, or the one we want to commercialize further, is because you have a diversification.
Excuse me,
Yeah.
can I just interrupt? Can you explain what are altcoins, please?
Yeah,
For the ones that don't know.
Altcoins stands for alternative coins. So it's everything that is not Bitcoin.
Okay.
It can be a meme coin, it can be a stable coin, but stable coins are usually not. Technically, it's an altcoin, but you don't call it altcoin. But if you look at CoinMarketCap, this is the website that tracks all the projects. You start with Bitcoin, then you have stable coins, and all the rest basically is altcoins.
Ethereum,
Ethereum, Solana,
Solana.
Binance Smart Chain, Chainlink, XRP.
Okay, great.
All those are altcoins.
So going back to your 3 pillar strategy. So the first one is Bitcoin, the
Yes.
first pillar.
Exactly.
And then, sorry, I interrupted you.
No worries. So the Bitcoin can range from 40 to 70%
of the portfolio.
Yes, depending on how bullish we are on the overall crypto market.
How much is it now, may I ask? Can you say?
Yes.
Yeah?
So Fabio and the investment committee decided for now to remain 50% in cash equivalents,
Okay.
so in Swiss francs,
Okay.
in a money market ETF.
Yes.
And from the other 50% that we are invested, about 40% is in Bitcoin.
Okay.
And the other 10% are in altcoins and crypto equities.
All right.
So we have a very clear tilt towards Bitcoin at the moment. And that makes sense because historically, and also proven this cycle, if the market is correcting, altcoins and crypto equities correct much more.
Okay.
They
great.
underperform Bitcoin by far.
Okay. So now that we're in a correction mode, you have mainly Bitcoin, but you also have some altcoins. Can we know which of these altcoins do you invest in?
So in the past, we used to invest in a variety of altcoins, also the so-called mid and small caps, so really small capitalized projects. But we realized that to capture the trend of an asset class, you don't want to take unnecessary risks by going for the small ones.
Okay.
So in this 3-pillar strategy, we have a clear stance on so-called blue chip altcoins, with blue chip equities. That's just the biggest ones. And I think there are 2 great altcoins out there who with a proven track record of a couple of years and institutional adoption. Those are Ethereum and Solana. And those are also the ones that we include in our portfolio. And we think they're a great match. They obviously compete with each other in a certain way.
Why?
Because they're both smart contract platforms. So both of them can be used to build applications on the blockchain. So it's like as if you would compare Apple's iOS and an Android, for example. It's like the technological level. You can either build on Ethereum with Solidity as a program language, or you can or you can build your applications, your decentralized application on Solana. And Ethereum is the safer place to be at because it's more established and it's more decentralized, but it's also more expensive to build on that, and also for the users. The transaction is way more expensive than Solana. And the maximum throughput, so the capability of digesting a lot of transactions at the same time, Ethereum has more of a congestion problem than Solana. So to put it in very simple terms, we believe that Ethereum and Solana will succeed. Not sure how long, maybe another project will take them over in 10 years. But over the next couple of years, I believe those 2 will still be on the forefront. Ethereum will have all the institutional use cases where it doesn't matter if a transaction costs a few dollars. but it has to be safe.
Mm-hmm.
And Solana will be retail applications where you have to be super fast and cheap.
Okay.
So Solana is fast and cheap, and Ethereum is secure.
Okay. Great. Great. So, and let's go then to the third pillar.
Exactly. So the crypto equities, that was Fabio's idea and a great one, as it turned out, because you have two important advantages when you include crypto equities into the strategy.
Well, excuse me, what are crypto equities?
So
those
are listed companies, like a Google or whatever, or Coinbase is a good example.
Okay.
They're listed on the New York Stock Exchange, but they make their revenue with crypto-related activities.
Okay.
Then you call them as a crypto stock.
Crypto equities.
Crypto equity.
Okay.
So when it's a listed company, that makes its money with crypto.
Okay.
With trading or custody. And we found out that we have two very positive arguments for the crypto equities. They are a good diversifier because they don't correlate as much as Bitcoin and the altcoins.
Okay.
So for example, last year, on this strategy, we had a positive performance, but Bitcoin was down double digit. The altcoins were down 30, 40. But because we had some equities in there who performed very well, because the stock market did very well, you have a very good non-correlated part in the portfolio. That's the one reason. And the second reason is our clients understand it.
Okay, yeah.
Because they
know what is a stock.
They know what is a stock, and you actually can evaluate those stocks according to these normal evaluation methods you have within the equity universe.
Okay.
So
great.
And to give you some examples, maybe, we have Coinbase on the trading side. We have a BitGo on the custody side that we find very interesting. You have some mining companies, so the companies that have the capacity, that build the physical capacity to mine Bitcoin. Or you can bet on the stablecoin developments by investing into the Circle Internet Group. That's the company that issues USDC, the second biggest stablecoin in the world.
Great. Great. Very interesting. This is the first time that I hear that somebody has this, three-pillar strategy. So I think for many people that's going to be new. And something else that I wanted to ask you is that, so you guys are actively investing. So you're active investors, right?
Yes.
And so why did you come to the conclusion that active investing would add some value to just, replicating Bitcoin, altcoins, and some stocks? So instead of just creating maybe a fund or an actively managed certificate that just
like an index
that just replicates this three-pillar investment and you don't touch it, why do you think that there is an added value by proactively being active and trying to manage when to buy or when to sell, or how to change the composition of the portfolio?
So there's two answers to this question. The one thing is we can be dynamic with the underlyings, which is very important in crypto because we have a lot of turnover. So, I mean, Bitcoin remains on top, but the rest over the last 10 years changed a lot. So every now and then the top 10 in the crypto space look very different than a few years back. So, and the problem is if you have a listed index, you're always a few steps behind. And you see that, for example, if you look at people who bought an index who had Polkadot in there, with now a project which is maybe in the top 30s and not relevant anymore, you have the underperformance of those projects who fail. That's why it's one reason why I would not buy an index, especially when it comes to altcoin investing. And the second argument is with a passive instrument, you're always 100% exposed. And in an environment like ours, where you have high volatility, our clients, they want drawdown protection. So they don't care if the market goes up 100%. They are happy if we capture 70, 80%. But on the drawdown, when market loses 50, 60, they are very happy if we manage to only lose half of it maybe. Because over a cycle, then you outperform. And with less volatility. And that's why we decided we want to grow with this approach.
Proactively. Okay. Active investing. No, that's great. Now, I wanted to ask you some questions regarding the maybe threats of that maybe crypto is facing or could face in the future. Let's talk maybe about regulation. Let's mention some Genius Act in the US. Do you think that this could be a threat or the other way around? I mean, Trump is pushing this to be really, he wants the US to be leading in the crypto sector. Do you think that this act and maybe other regulations or acts will make sure that the US leads? Or do you think that maybe also other countries like China or maybe Europe could take the lead? How is the regulation framework at the moment having? Which impact is it having on the crypto market?
So we can start here in Switzerland. It's not good from a regulation standpoint. We used to have very favorable crypto regulations in Switzerland, but we slept on it. And the EU is a bit better with MiCA, but if you look at where the music is going on, it's the US and Asia. And the US realized that they will have a huge problem from a monetary standpoint if people stop buying their treasuries. And they found out that with stable coins, they have a new way, a new demand for US treasuries, because all those stable coins, they have to have either cash or treasuries in the back. So the USDC, they want to push stable coins out of the US a lot, because then they have more demand for their treasuries. That's, in my opinion, why Trump pushed his whole crypto agenda so much. He manipulated crypto a lot with his own token, and he kind of took advantage of that, which I did not like. But to answer your question, in the US, they want to be the crypto nation #1, and for that they introduced two bills, or two acts, the Genius Act and the Clarity Act. For stablecoins, it's the Genius Act, so a clear regulation framework for stablecoins. And the Clarity Act is a clear classification if Bitcoin is a commodity or a security, if Ethereum is a commodity or a security, or if Solana, for example, is a commodity or security. And what this actually brings, this clear image brings more institutional trust. That's the most important thing, because people then realize what they're actually buying, and they also have the law at the back who backs them. They know if I buy Bitcoin, this will not be handled as a security. Now they also know if they buy Ethereum or Solana, it will not be handled as a security. That's very important. And when it comes to clear stablecoin regulations, we will see a lot of demand now coming in the space. Visa is partnering up with stablecoin issuers. I can imagine a future where every company brings out its own stablecoin, because it's easier for them for internal bookings, and then you can, similar to a loyalty program, then have the stablecoin of a company. So I think the US is very good in that sense. They will have to push further. I really hope that the next Democratic administration will not throw everything under the bus, which sometimes happen. I really hope that both parties, the Democrats and the Republicans, are pushing crypto further, because I don't see any way around it. And otherwise, it will go, all this innovation will go to Asia, which is also a problem that we as the West have. If everything in the future, AI, robotics, and even crypto will be native to Asia, that would be, from a geopolitical standpoint, an unbalance. So for that, I think the US are on the right path. This is the one question about the Genius and the Clarity Act. The Clarity Act is more or less settled. The Genius Act, they're not so sure yet. So I think in November or latest January next year, we will have a clear green light picture also from the political side, because now they're still discussing. Some industry experts, like the CEO of Coinbase, was pushing the last draft back, because he did not agree, because for now, as it stands now, a company like Coinbase cannot pass on the yield from those stable coins to the customer, which would be a great use case. So they're still working things around that. But to answer your second question about opportunities or threats from the technological side, I see two trends emerging. One is fully here, of course, it's AI. And the other one, which is looming a bit further, but is causing a lot of fear with certain investors in that space, is quantum computers.
Okay.
So on the side of AI, I think AI brings a lot of advantages and also disadvantages. The advantage of AI is you can make very clear audits on the code of a blockchain. So you can make a blockchain more secure. And AI agents in the crypto space can help you a lot to analyze wallets, to bring in a lot of visibility and to compress a lot of complicated information and to transfer it in a very understandable way to us investors. So I think AI and crypto go hand in hand on a very positive side. And the negative aspect is, of course, all the scams and hacks that become even more brilliant with the help of AI. So I think the crypto scams will continue, unfortunately. So people that they believe they invest within a legit platform, but at the end it's a fake platform and it's an AI bot that does some fake trades. And we came across, unfortunately, such cases as well.
Okay.
And it happens in Switzerland, happens everywhere. It's hundreds of billions, or I think it was 50 billion just scammed last year globally with crypto scams.
Wow. So investors invested in fake exchanges or
Exactly. Those are bots.
Yeah.
And reaching out to them on different platforms, advising or gifting them $50 trading bonus or something. Then they go on this platform, which is not legit. At the back end, nothing happens. The trades are fully fake simulated. And then they get fake profits. And they think they're very good traders, or they buy certain bots that actually don't exist. They pay in more and more and more because they get greedy. And at the end of the day, it wasn't backed by nothing.
$50 billion. I mean, that's amazing.
Yeah. So some sources say it's even more than that.
Wow. Okay. So do you have the feeling that, or do you think that investors might be safer by having their Bitcoins and their altcoins and crypto in general, maybe in a Swiss crypto bank or a Swiss bank like Swissquote or any other bank like that?
Yes, I mean, I would say the better the financial institution is regulated, the safer it is to hold crypto there.
Okay.
Other people would argue you could do self-custody on a ledger, for example, but I don't envision a future like that.
Why?
Because you also don't hold your cash under the mattress. You have it on a bank account or in a safe. I just think, sounds a bit harsh, but to humanity, but people are too stupid as a whole to manage what's theirs. I mean, it's just too dangerous also. And imagine everybody would have their whole wealth on a stick at home.
Yeah.
We would see a lot of kidnapping. And
Okay.
I think banks still have their place in society. They're very important intermediaries for KYC, AML, but also for giving trust. I just think we will see new form of banks with better fees and more aligned with customer needs. But when it comes to crypto, I really believe in institutional custody. So your clients, our clients, or other investors, they will have their trusted bank or brokerage account where they can buy crypto directly.
Okay. So just to wrap it up, basically speaking about opportunities and threats. So regulation can be an opportunity because it would regulate the market, it would make it secure, and it would attract more institutional assets.
Yes.
Threats, we talked about AI scams that can be even more dangerous with AI because they can seem even more credible, right?
Very much, yes.
So that's about the threats. Now you wanted to talk about quantum computer, maybe going to the direction of threats.
Yeah, exactly. Quantum computers is So there's an important word to mention here, the Q day. This refers to the day where quantum computers are technically able to crack Bitcoin wallets. This will eventually happen. Also, the experts, they are not in accordance when this will happen, but it will be between 5 to 15 years. And until then, the Bitcoin network and also other crypto projects have to find a clear way into a quantum-proof era. So they have to update their wallets. What this technically means is people who have their Bitcoin in old wallet standards need to transfer it into new ones. And for that, we need a lot of education and network coordination.
What would be an old wallet and the new wallet?
So an old wallet is just if you have Bitcoin on a wallet of maybe 10, 12 years ago and have never touched them.
Okay.
Those are the wallets where you have the public address somewhere available.
Okay.
And a quantum computer could, from this public address with complex mathematical calculations, find out what the private key is and kind of crack this wallet. So it's like as if you imagine you have a very old door in your house that can easily be cracked. You just have to update the lock.
Okay.
So, and you do that by transferring your Bitcoin into a new wallet, or if you do it the way you said earlier, if you go with your trusted bank, they will do this.
They will do this automatically for you.
So this threat of the quantum threat is real, but just for the self-custody guys who have very old wallets, and for the old wallets where the private keys have been lost or that are dormant. Dormant means they have never been used or inactive for 10 years plus. Like, for example, the wallet of Satoshi Nakamoto, the originator behind Bitcoin.
Do you believe in him? Do you think he exists? Satoshi
as one person?
Yes.
No, I think it was a group of engineers who decided for the purpose of decentralization to remove their identities from that and never to touch those Bitcoin again.
And that wallet still exists?
That wallet still exists, and it holds about 1 million Bitcoin. So it's the biggest wallet out there. And the problem with that wallet is, should the originators from Bitcoin not move them into a new wallet one day, those could be cracked. So there's a lot of, again, expert opinions. Is a broad range of how many crypto or how many Bitcoin are at risk of quantum computing. I believe it's about up to 20% of the network. So that is a real threat that could one day be captured by quantum and then redistributed into the market. So it could be a lot of selling pressure. That's the one argument. But the way I see it is, I believe the first powerful quantum computers that can crack Bitcoin will be owned by governments like the US. And if you look at the US over the last years, whenever they seized Bitcoin from illegal activities, they built a reserve. They did not sell it. So I think in 10, 15 years, when this will happen or could potentially happen, I think one Bitcoin is so valuable that those people just keep it then.
Okay. So you're saying that basically quantum computer is a real threat, but I mean, who can own or who can have access to quantum computer? Not everybody. It must be, I mean, this is quantum computer development is linked to extremely high costs.
Exactly.
So this could be owned by maybe companies like Google, and maybe some governments could have access to it in case of illicit activities. But probably they won't be thinking about how to hack a wallet of Mr. X who has done nothing wrong. So can we say that maybe this threat is technological, is there, but it's less probable that it's going to be used against the wallet holders?
100%. I mean, it will be very expensive to run quantum computers, so they will of course try to hack the biggest wallets out there. I don't think they would go for the small retail wallets. And also, I mean, practically, if you have a powerful computer that can hack Bitcoin, it can also hack banking systems.
Mhm.
It can hack security systems.
It could hack anything.
Anything.
Yeah.
So I always ask my question, why would those hackers start with Bitcoin? In the global context, Bitcoin is still very small.
Mhm.
And also in 10, 15 years, it may be a very huge thing by then. But still, if I would own a quantum computer, there's a lot of things I would crack first before I would think of going after Bitcoin world.
Yeah. And also, I mean, who's going to be running the quantum computers are going to be these huge companies, right?
Yeah.
That have completely other interests than going out there and hack some
Exactly.
accounts of
So it will be either these big tech guys
Mhm.
or governments that can politically pressure those tech companies not to sell them
Mhm.
or to sell it to the government at a discounted rate.
Mhm. Okay. Great. All right. So thank you very much, Tim. It was a great pleasure having you here with us
Thank you.
and for the educational session. I think there is still a lot of educational work needed in this space. It's still a new technology for a lot of people.
Absolutely.
So I'm going to ask you one last question, and that will be for December of this year. Where do you see Bitcoin?
So I will answer this question. I just want to make one last remark.
Mhm.
Also, very grateful for this conversation, for the Esfera community. I would want to highlight that wherever you are in the educational journey of Bitcoin and crypto, people try to, they get ahead of themselves. So they invest into those because they believe Bitcoin is already so big that they want to find opportunity elsewhere, and they buy a shitty coin and something very small. And I used to do that in the past as well. But after years, I came back to the realization that Bitcoin, maybe Ethereum and Solana as well, and the biggest crypto equities, those are the blue chips.
Mhm.
Focus on that, because if the market continues to grow, they will give nice returns. And all the small stuff is a temptation, but I would really recommend it to leave it out or to see it for what it is, pure speculation.
Mhm.
That's very important. I mention that in every podcast.
Great.
Because it's important, because I don't want to give the impression that you can buy whatever in crypto and you make money. This is
Yeah.
definitely not the case.
Yeah, maybe before you answer this last question, just one very last question before that. Now that a lot of regulation is coming into the market, are you expecting the same returns for Bitcoin than compared to those that we have seen so far?
So I think the Bitcoin returns will still be of very nice size, but less over time. So same as with the drawdowns, I think the bands are compressing.
Okay.
So we will have less top to bottom drawdown, but we will also have less bottom to top expansions.
Okay.
Because in the past we saw 10,000%.
Yeah.
Or 8,000%.
Do you think that's
6,000%.
over?
I think this over 4 years, yes.
Yes.
I think it will, the bigger it becomes, makes sense.
Yeah.
The more it will trade. Still, I mean, it's still, I would say, in a good year, Bitcoin can still do 100%, or maybe in its best year in the future, it will do 200%.
Yeah.
But the time where it makes 5, 10x in 2 years, I think those
over.
times are over.
Okay.
And at the same point, I want to highlight that 80-90% drawdowns for Bitcoin are also over.
Okay.
I think the more institutional it becomes, the less volatile it gets.
Okay. Great.
And to answer your question, in December.
Yeah. December of this year, what's your tip?
So I think we will bottom, as mentioned, around between 40 and 50. And then in December, we will start going up again.
Okay.
So we will be maybe at 55.
Okay. Super. Great.
Still lower than today.
Yeah.
But what maybe is of more value, I think by the end of 2029, I suspect we will see Bitcoin at around $220,000 US.
Okay.
So that's quite.
That will be like the next 3-year cycle
Yes,
that
I
should
believe
get to the
it
top.
would. Yes, maybe it's in 2028. Maybe it goes a bit longer.
Okay.
So those cycles, those 4-year cycles, it was more like a religion. People believed in it,
Yeah.
the retailers.
Yeah.
But now the institutionals, they will say, you know what? Why should a 4-year cycle be intact? So maybe this will be less clear, this picture. But I think the next market top in the coming years will be over $200,000.
Super. Great. Thank you very much, Tim. It was great having you here.
Yeah. Right.
And so let's see in December where we stand, and maybe we can do a follow-up podcast next year.
Of course. Thank you very much.
Super. Thank you.
All the best.
Take care.
Likewise.
Thank you for joining us on the Asfera Wealth Podcast, where Swiss precision meets global perspective. If you enjoyed today's conversation, subscribe so you never miss an episode. To learn more about how we serve high net worth individuals and families, visit asferawealth.com. At Asfera Wealth, we're committed to building, protecting, and connecting wealth across generations, and to learning every day from the brightest minds in wealth management, business, and beyond. Until next time, keep your vision clear and your legacy strong.